Hey, equity mates, Bryce and Ren here for another brief bonus episode. I mean, we'll try and keep it brief, but you know how Bryce gets.
Come on, mate.
So look, we've really entered Friday the 13th. As you would have just heard in our conversation with Andrew Brown, we're doing a bit of a ring around, reaching out to some of our previous experts who have been on the show, some friends of the show, just to get their thoughts on what is a pretty chaotic time in the markets. As we said in the last one, it's rare that you really get tested, at least in the last 10 years since we've been investing, where your stomach really gets tested, where you really test that idea to be greedy when others are fearful. And there's a lot of fear around the market and around the broader world really right now. So we're making some calls, speaking to some experts, and seeing what they're thinking. This time we're calling Ilan Israelstam, the co-founder of BetaShares, one of Australia's largest ETF providers, to get his thoughts on what is going on. So Bryce, if you can do the honors, and
Here we go. Dialing in Elon.
Hello, this is Elon.
Elon, Bryce from Equity Mates. How are you going?
Hey, how's it going? There's silver tone. The silver tone. Yeah.
Now you are live on the show. We've just dialed you in, so thanks for your time this morning in what is an absolutely chaotic time for every investor.
Unbelievable times, isn't it?
It is. And I think just to put some context as to why we're giving you a call, as you can imagine, there's a lot of investors in our community who are at the start of their investing journey and perhaps would have bought some of their first stocks only a matter of months ago and are now feeling very, nervous about what to do and probably a bit disheartened with the whole situation. So we just thought we'd call around to some of our experts and friends of the show just to get, firstly, your view on where your sort of head is at the moment and how you're thinking about your investments, and then more around how you would think about going forward and some advice for them. So, let's just start with, I guess, what are your thoughts at the moment? Where is your head at?
Look, it's a pretty unusual time in the market, and I can certainly see why investors who have been consistently waking up in the morning to see their portfolios go up would be really jarred by watching them fall out of bed, basically. I think that doesn't mean you should be sort of scared of the stock market, but it can be jarring. And somebody said that this is a time where you really get to know yourself. You know, the stock market really can separate the men from the boys or the women from the girls. And I think my perspective is that most of your investors would have never seen anything like this. I mean, to be honest, very few of us have seen anything like this. But it's really important. Buffett once said, unless you can watch your stock holding, decline by 50% without becoming panic-stricken, you shouldn't be in the stock market. They do go down in these scenarios, and it's really, really important to keep your head in this situation. But it's just so jarring because very few of your audience probably would have ever experienced it. But risk's supposed to make you feel uncomfortable, but that's where returns come from. So sometimes it's scary, but if you don't have risk, you actually can't have return. And that's why I'm thinking about my own personal investing. I'm trying to sort of keep a level head. I definitely can't give any personal advice to your listeners, but selling for no reason or due to panic is obviously a very silly thing to do. If you don't need the money, and I would imagine that very few of your investors actually need the money right now, selling something where it's on sale and on a major discount, sort of Boxing Day sale, is not typically what one should do. And this is about staying calm, stay invested, and importantly, stay diversified. I think those are the types of people who will best weather the storm and ultimately reap the rewards when the clouds dissipate and the sun comes out. So a lot of analogies there, and a lot of in some ways flowery language, but I really think this is a time to keep a level head, and that's certainly what I'm trying to do for myself. And then obviously people have a variety of different strategies. Some will try to buy the dip, some will just stay ahead, and some will sell. So I'm certainly not one who's going to be selling in this market. And the question of whether one buys the dip or not, it really comes down to what sort of a mentality you have. Do you have a trading mentality, or are you just looking to sort of weather the storm? And that's something that I think ultimately people have to make the decision for themselves based upon their personality.
Now, Alon, this is Alec here. We should give BetaShares a shout out because there's been a lot of talk in the Equity Mates community around the Bear ETF. I think some people have made some nice money over the last couple of weeks. How do you think about products like those inverse ETFs at a time like this in your personal investing philosophy?
Yeah, so those products, the short products that you're talking about, you're absolutely right. We have seen, unprecedented interest. Yesterday alone, we had 150 million trades through the Strong Bear Fund that's called BBOZ. So we've got those three funds that are equity funds that essentially are negatively correlated to the stock market, BBOZ, which is the Australian fund that's geared, Bear, which is an ungeared version of that, and then BBUS, which is a US share fund that's geared. I mean, those are clearly, if you look at the screens, they're the only ones that are going up. So we've had incredible amount of interest in those. The important thing with those is we always say they are typically not buy and hold products. Those are products that people will be holding for, particularly the geared ones, will be holding for a short period of time to either hedge their investments or try and take advantage of market falls. The markets do typically go up over time. So I think the way that anyone has to think about those is a trading product, and holding them for the long term is not something we would expect people to do unless they're just looking to constantly hedge a part of their portfolio. But they have been very, very, very popular, to say the least, over the last little while. And I think if one can't take that perspective on sort of that sort of trading perspective, then in that scenario, it's really important to consider some diversification. Now, again, if one needs to actually sell out of an equities exposure to get diversification, that may not be the best thing to do in a sort of a panic selling environment. So it's better to rather add to your portfolio and add some bonds or add something else than sell equities to buy bonds. But I think we've certainly seen both types of people in our market. We've got so many different funds now. We've also got people buying the geared funds up, right? So, that's what it takes to make a market. But yes, I do agree they've been incredibly popular as funds.
To your point, speaking personally here, I am very much taking this opportunity to average in a bit more on the gear that I do own, ticker GEAR, and also GJUS, GGUS. Obviously, both have had very significant falls over the last sort of 10 trading days or so. But what is some of the movements that you've been seeing, with those stocks?
Yeah, we are getting. I mean, but it wouldn't surprise you to say that we're getting certainly more flow into the bear funds than the geared funds. Yeah. But we are getting oversized investment into the geared funds as well. And those ones you have to be comfortable with. An investor in those funds will need to be comfortable with gearing. But if one takes the view that the markets go up over time, then that is something that, so long as somebody's comfortable with gearing, it is conceivable they could hold for a longer term than a bear fund. So you're right that some people are trying to use this opportunity to get set into the market. Yeah. In a way that they haven't been able to do until now because the market has been so fully priced. And so for those people who are now looking to enter the market and have had their eye on just a broad exposure, such as that exposure you mentioned, or a particular high quality stock, or the Nasdaq 100. These are great companies that are now, if you think about it, they're the same companies that are cheaper than they were, 20-25% cheaper than they were, a few days ago. So there's certainly people who are absolutely getting exposed to things for the first time and finding their way in over time. We're seeing that for sure. So we're actually seeing we saw a lot of trading, for example, and this is quite speculative, but we saw a lot of trading in our energy companies ETF
Interesting.
for fuel, because people think that at some point that's just going to be a screaming buy.
Yeah.
And you have to make your own decision about how one feels about that exposure. But so we are seeing an interesting combination of things, and we're seeing people buy into our cash ETF. So yeah, the market's causing a lot of different things for different people.
Fascinating.
So, Ilan, we really appreciate you taking the time on what is sure to be a very busy day in markets in Australia to talk to us and to share some of your thoughts. As we wrap up, do you have any final thoughts either about what you're seeing in the markets or how you think retail investors, everyday people like Bryce and I should be thinking at a time like this?
I have to repeat what I said before. You have to stay calm. Understand that the stock market goes down as well as it goes up. It doesn't always go up. And as I've said before, those people that are willing to take that opportunity to remain calm, add to their position if they feel that they, or at the very least keep their positions where they are, will probably be the ones who end up with, long-term wealth creation over the long term. Those that panic and sell you can't make money in the market if you're not in the market. So this is not somehow where panic selling, I think, is a dangerous thing to do. So that would be all I would say, really.
Yeah, I completely agree. And I hope those listening that are out there investing for the first time can sort of instill that thinking, because we haven't experienced anything like this before. So important learning to have early in the investing journey, but to your point, Ilan, markets generally do go up over the very long term. So stick with it. Really appreciate your time this morning, Ilan. I'm sure it's going to be a busy day at BetaShares, so we'll leave you to it. Have a great weekend, and we'll keep in touch.
Thanks, fellas. Appreciate the call.